Okay, welcome to another edition of Real Estate Investor Talk. We're sitting here in Kempton Park in Johannesburg, and sitting with me is Koos du Toit, who's the Managing Director of P3 Investment Group. First of all, Koos, very warm welcome to Real Estate Investor Talk. I think this is a great opportunity for real estate investor to expose you by video, and not only through print to our readers and also to our audience out there. Koos, first of all, tell us a little bit about the P3 group, your involvement, and that kind of thing, so we can share that with our readers and audience out there.
Thanks, Neil. Thanks for the opportunity. You know, P3 Investment Group, I joined the group in 2006 as a normal club member. I became excited about the idea of the responsible approach that P3 has towards property investment. You know, when one reads Kiyosaki's books, you know, all the things that he says often makes a lot of sense, but I needed to have a practical plan that I could implement in order to create a passive income. And that's what P3 provided for me. We learned through the books and the tools that it's possible to actually build up a portfolio of properties, even by earning a normal income over a period, and then getting the tenants to pay off your properties for you, and you live off the passive income derived from the property. And that's the mistake people often make when they think about property investment. It is buying and selling. Okay. And P3 is completely against that. Our idea is to buy a property, to keep it, and to live off the income streams that each property provides.
Okay. All right. Well, let's talk a little bit about sort of, you know, the current market. I mean, we've come through a fairly tough, like 4 years, you know, since, you know, NCA kicked in 2007. And in fact, you open up every newspaper, you open up, you know, you listen to what's on TV, on the radio, that kind of stuff. And, you know, property has kind of lost a little bit of its favor, and its fervor, and its popularity. Yeah. First of all, is that so? I mean, because those messages are very negative. And I think secondly, what would you say to those kind of statements going out there? I mean, is it still the place to invest, do you think?
You know, property is a very stable investment over time. And I know a couple of years ago, about 25% of properties sold were sold for investment purposes. Everybody was seen to be jumping on the bandwagon. And those people have now disappeared. And the statistics show us that only about 8% of properties that are sold now are for investment purposes. And I really believe those are the real investors, the people who have a long-term view of property. In fact, if one looks at the facts and the figures now, you will find that you have very low property prices, coupled with very low interest rates. So it is absolutely the best time in history that I can recall to buy investment properties at this stage.
Right.
But people who follow the leader, follow the flocks, will always go against the stream. And I think what we need to do now is to encourage people, to say to them that if you're looking at building up a property portfolio, this is absolutely the greatest time that we can recall in the history of South Africa to buy property.
Fantastic. Now, Chris, I know you've also got a very large, I know you've got thousands of members, and a lot of people have followed you and have followed your methodologies and that kind of stuff. Tell us a little bit about those people, those investors that have followed you. How have their successes? Have they done quite well? Have they sort of developed? I mean, it's been tough times, because we've had high interest rates, difficult time. Tell us a little bit about some of the successes of the people that have come.
You know, what I like about our model is it's a low risk model. We believe that you buy a property and you get the tenant to pay them off, and you live off the rental income, which means that you never go take on high risks like refinancing and living close to the edge. Right. That is why most of our investors have actually survived this recession. They've come through. They went through hard times when interest rates were higher. Obviously, their shortfalls in the cash flows were under pressure. Right. But they never had the threat of losing everything that they invested in. Right. Obviously, they're all smiling now because the people who got through the recession are now really, with low interest rates, paying very low shortfalls. But it is a myth to say that people don't get bonds these days. You know, we've found that if you have a good, healthy application, the banks do grant bonds for investment properties at the moment. And we have found that even during these bad times, our investors were able to get 2 or even 3 bonds per annum for the last 2 or 3 years, if there was nothing negative in their credit record or anything like that. Right. So we've got lots of success stories of people slowly building up a period, and I believe that when the markets change and the banks become a bit more generous in granting bonds, those who are battling to find bonds now will then be able to catch up to build their portfolio, as we suggest in the personal plan that we work out with them.
Right.
Yeah.
Okay.
So one must not lose faith. You must
Mm.
continue working according to your strategy and not give up and just follow the fashions of now properties in, now properties out. Those people
Right.
are actually making a huge mistake.
Okay. All right. So I think, have you got some advice then maybe for somebody who's just starting out? Because I think it's a great time personally to invest in property right now. I think this is probably pretty much at the bottom, I would say.
Yeah.
What would your advice be if somebody says, "Oh, wow, I like this property investment thing"? What do you suggest? How do we go about it?
I think the first thing that
Yeah.
people must do is they must
Yeah.
get the right knowledge and way of assessing whether a property is a good investment or not. So people must read. They must read magazines like Real Estate Investor. They must read books of Koos du Toit and other people who are experts who have been doing this for many years.
Mm-hmm.
And I really think that the easiest way to gain all this knowledge is by joining a property investment club such as B3, where everything basically is given to you on a plate. All you need to do is to educate yourself.
Right.
Because people who are not completely aware of what they're doing can make mistakes. You know, property investment is not without its risks.
Yes.
If you don't know what you're doing, you can make mistakes and you can lose money.
Yes.
But the nice thing about it, it's not rocket science either. If you follow a few basic principles,
Yes.
the risks are extremely low.
Absolutely.
So by joining a club, you can basically build on the experience and expertise that have been built up over years by the club, and you don't have to pay a lot of school fees in terms of making mistakes and learning from them.
Fantastic.
If you earn a good salary, you have a little bit of money at the end of the month left to invest, there's no reason why you shouldn't get involved, buy that first little property that you want and take it from there. But have this vision of building up a property portfolio, paying them off mainly with the tenants' money and living off the income streams which keep up with inflation for the rest of your life and even the life of your children afterwards.
Fantastic. Koos, is there anything else you want to add out there to the readers? That just some nice sage advice. I mean, maybe something inspirational, because some people I know that walked away, they haven't done so well in this property thing and say it doesn't work.
Yeah, I think people who say it doesn't work have not done it in the right way.
Okay.
I sincerely believe that if you even think of wealth creation or retirement planning and you don't have a couple of properties in your portfolio, you have not made adequate provision for your retirement. We can only look at the results from insurance companies and retirement annuities and so on, and the effect of inflation and the time value of money. Most people will retire are poor after a few years.
Sure.
But if you have a couple of properties that generate an inflation-linked income, doesn't matter how old you become, you'll never run out of money. And that is the key to successful retirement, is having income streams, not just a lump sum of money that you don't know how long it should last.
Okay. Now, you've got a unique approach in the sense that you mentor a lot of your members, but then also at the same time, which you said they are registered financial advisors. So they actually sit down and they look at your portfolio and they actually make an assessment and they look at your, I suppose, your ability to buy, your affordability and that kind of stuff.
We see ourselves as a responsible organization, and we don't want to get people into trouble. And each person is different, so we won't say there's one recipe that fits all people. We sit down with a person, with our financially registered financial service provider. We sit down, we look at their portfolio, we look at their assets and liability, their cash flows. We even look at things like their estate and retirement planning and their testament, and we help them to set up the necessary structures to be able to build up a portfolio without subjecting their portfolio to unnecessary risks. And then we work out a plan to say, maybe this year you will only be able to get one bond or maybe two bonds, but next year let's try this and let's do this. So we work out a strategy over a period for a person to accumulate these properties, even if it takes a couple of years to accumulate the properties. But it's a responsible approach that will not let them get into trouble, because cash flow is king, and we keep an eye on people's cash flows all the time and make provision for interest rates that might rise in the future and so on. So you don't have to take risks when you invest in property if you know what you're doing.
And then I think also what a key part is of your whole sort of offering is the fact that you're actually doing it yourself. Because I think there's a lot of companies out there that that say yes, invest, do all these different things, and yet they're not investors themselves. And I think that is also a bit of a differentiator.
No, it is absolutely. We practice what we preach.
Right.
And I'll be honest to say that we've also learned our lesson through the years. What kind of properties one should rather avoid, and what to buy, what not to buy.
Yes.
And those are the kind of things that we share with our investors.
Right.
But very definitely we practice what we preach, and we We definitely are busy building. In fact, the owners of P3 are all busy building up their own property portfolios, like all our club members, in order to be able to get to a point where you can decide whether you want to go to work that day or not.
All right, fantastic. Chris, it's been wonderful chatting to you. Thank you very much. I think for our viewers out there, it's also been really good. So I just want to thank you for the opportunity for having a discussion.
Thanks, Neale. It's always nice talking to you.
Thank you.